Okay, I want you to stop watching this video. Why? First, because I want you to direct to my blog. You have to read the blog first before you're going to watch this video, or else it would not make a sense. Okay, look at your screen. I'm directing you right now on my screen. It is fxact.blogspot.com, and the title of my post is How to Trade Forex. You have to read this first. So why? For the reason I'm not teaching any indicator, strategy, or anything that have to do with others or the guru, and the worst, the broker. See? Well, if you are currently making money off trading, then no need to watch this video. But if not, and most especially you have experienced wipeout, please, I beg you, you have to watch. You have to go to my video, to my blog first. If you are currently experiencing that you don't know where the market is going, confused between relationship within time frame, or even you don't know how to look on the higher time frame, don't understand why the support and resistance are different every single hour, and if you are really dependent in indicator to make your trade, I guess you really have to watch this video. Again, this is not a strategy, this is not an indicator, this is not the holy grail that everybody must have, but this is something to do with the graph. This is something to do with the graph, and how are you going to respond on the price on the market. See, this is the heartbeat that what I'm trying to say. Before you're going to implement a certain strategy, before you're going to use a certain indicator, or before you're going to make a rule on your trade, you have to know this first. And what's that? This is it. See, what I'm trying to show to you is this one. We are going to locate, we're going to know, we're going to be one in the market, and by doing that is we have to know the structure. See, and to do that, it's really simple. See, it will take like practice to do this, but once you could get it, man, I told you, every indicator, every strategy that you will have, it will be easy for you to respond, not to react. So why is that? Here it is. On the 1-day chart, I'm just using the GBP USD. We could see that from this is the top, it went down, and then it went up again. So forming, he have formed a lower structure here. Then after that, he went down, breaking the lower structure, right? So he have made a higher high or a higher structure over here. Then while breaking the previous lower structure, he have created a new lower low. See? You have to know this so that the indicator that you're going to use will be efficiently, effectively be guiding you and would influence your trade. So let's proceed. After that, what the market does is he break the previous structure high, which is what? The previous structure high was this one. So currently, we are now having a higher high structure, right? So he made a new structure which is a higher high over there. Then, as we proceed, he created a new structure low. Did he break it? No, not quite. See? Okay. And actually what the market does is he bounced back, right? There is a rejection over here. So he bounced back since he did not break the previous high and he did not break the previous low. What the market did, he bounced back all the way up, creating another new structure which is higher than the previous one. See, this is what I call the heartbeat of the market. You have to know this so that your indicator, your strategy will effectively be showing you results. You will be responding right, not reacting on it. Now, as you can see, as we proceed, he bounced back and created a new structure low, which is higher than the previous low. In this way, if we connect all this one, we could see what? We could see the trend already. Right? See? So now we know on a 1-day time frame there is a trend going up. So let's proceed. After that, what he did, what? He broke the previous structure high, creating a new one. Of course. Why? Because it's a trend. We now know that in order to have an uptrend, he has to break the previous high. This is the first high. This was the first high. He broke it. He created a new one. He broke it again. He created another one. He broke it again. And he created another previous high. After that, there is a rejection, which is we don't know yet if this will be another lower low. Higher low. Right? So, what I'm showing you is this is the very thing that everybody must understand before they're going to learn about strategy and indicators and time frame and etc. They have to understand first the heartbeat, the very nature of the market and what the price is doing. Now, the question is, why is that? Why do they have to understand that? Here, I'm going to show you. We all know if in case the market will break this previous low, then there will be a possibility of downtrend, right? But if the market will not break the previous low, then we all know that the market will bounce back, and the possibility of breaking the higher structure is above 50%. See, this is a very simple thing that we have to exercise. See, this is a skill that you have to know. You have to identify. Because if you could, I will tell you, it will be beneficial in every indicator that you will use. Let me show you one. Everybody is fun using moving average, right? What's the moving average? Is the number of bars, and he get the average of those number of bars. Now let's use the 100 moving average strategy. If you could see, I'm turning it on. You could see that? You could see that there is a higher trend. And the right way to get in the market is at this point. Let me circle this one. This point. Oops. This point. This point. And if the market reject and doesn't break the previous low, then it is the good way to start a trade over here. See, by just doing this, and if you could perfect this one, you could be a naked trader. Really. But if you are fond of using indicator as a sign, then much better. See, that's just one of the sample that I'm trying to show you why you need to understand, to identify the heartbeat, the very nature of what the market is doing. So let's turn that moving average off. And of course, not only that, now let's remove all the arrows, all the directions on the 1-day chart time frame, because we're going to the 4 hours time frame, so that you will see the relationship between two different time frame, which is the daily time frame and the 4 hours time frame. Now let's proceed to 4 hours. Okay, that's it. This is the 4 hours. As we could see, this was the red thing, the red lines that we draw is already the roof and the floor, the resistance and the support of a daily. But since we are going to move on the 4 hours time frame, then we will draw again what is the market doing on the 4 hours time frame. So that we will not be confused. Hey, what's that? Let me remove this one. Okay. We will draw another line but color it blue to indicate that this is the 4 hours. See? I will start on this one, on the lower low of the daily, since on the daily time frame there's already the higher high. He is now currently looking for the low, which is a very good point, a very good price to start the trade. But since we are now on the 4 hours, we have to look where is the roof and where is the floor of the 4 hours. So from this point, we could say here the market goes up, leaving what? Leaving a trail. This is the floor of the 4 hours. Then the market, what? What did the market do? The market goes down again, right? By going down, did he break the previous lower structure low? The low of the 4 hours? No. Did he break the low structure of the 1 day? No. So what did the market do? He bounced back. He rejected it and he break the previous structure high. Right? As you could see, he made a previous structure. This is the higher high of the 4 hours. By breaking it, he created another lower structure over here. Okay. Then after that, what the market did is, as we proceed, went down, creating another lower structure. Right? There you go. Let's widen our graph. That one. There you go. So, did the market break this structure? No. Of course, if he did not break the structure, it reject. What did the market do? He went all the way high, creating a newer structure of higher high. This is the previous high, which is he broke it and created a new one. There you go. After that, what did the market do? The market went down. But did he break the lower structure? No. See? By doing this, you could identify if there is a sudden movement, there's a sudden change of trend. And after that, what the market does is he went up. But did he break the previous structure high? No. The previous structure of the 1 day? Of course not. So meaning to say, we could tell that in the 4 hours chart, there is a big possibility that there is a downtrend forming on the 4 hours time frame. Right? So, as we go along, if you could see that he broke the previous structure low and all the way to this point, even broke the second previous structure. So that's another confirmation that in the 4 hours time frame, there is already a downtrend. Question: how would you know if there is a downtrend on the 1 day time frame? You would know that if what? See, what did the market done? He make that one. He created a new structure high without breaking the previous structure high. And if he did not break it, of course, what will he do? He has to go down, which is currently, we did not know yet if this is the structure that he is creating. But if it does, he already break the previous structure low. So if you connect the dots within the downtrend, you could see on the 4 hours, you could see that there is a downtrend on the 4 hours time frame. Now the question is, how would you know that there is a downtrend, there's a beginning of downtrend on the daily time frame, if the market will break the structure of this one? Because this is the previous low of the daily time frame. If that's the case, we know now that there will be a series of downtrend going on, right? That's why I call this one the heartbeat. You have to know this, because if you're going to use, again, let's use for those who are fun using moving average, I'm using 100 moving average, meaning to say I have 100 bars that he will calculate the average of those 100 bars. And you could see, as I turn it on, you could see that there's a breakup on the 100 moving average. So meaning to say, this is another confirmation, and in fact, this is a very good place to start the trade down. See? Could tell that one. The moving average 100 is a good indicator for finding the support and resistance. But if you combine it with 50 and in exponential moving average 15, you will have a better indicator, confirmation, and a confidence to trade if you are fun with the moving average. But if you're not fun with the moving average, you could use another indicator. As you can see, I'm gonna use another one. I'm gonna use the pivot. Well, still the same. See, I'm gonna turn on the pivot. See, look. See, it says here, this is a major pivot of the yearly. You could see it bounce back. See, this is a confirmation of a good start where to trade if you want to trade go down, if you are a continuing trader, right? So currently on the daily time frame, there's still no low. It already made a structure high, so it's currently finding the structure low, which there's not yet being formed, and that includes in the 4 hours, and so on as you go along to the 1 hour. See, if you could plot this one on the 1 hour, then it will be much better, since you will have a full confidence on your indicator, on your strategy, and on, of course, on your trade. So the importance of this is you will be as one in the market, and you will have the full confidence in trading. And that is how you trade Forex. Move along. Let's move along. So we will have to delete these arrows. Okay, so that there will be, we could have sense on what we are doing. As for me, now, if ever you have did this already, what I usually do is I combined the previous structure low and the previous structure of the daily and the 4 hours. I combine that one, meaning to say, if the market will break this through, then there will be a downtrend going on. And here you could see a lot of pips. There will be a strong floor that they have to break. So the possibility is you will just go here and will bounce. You got what I'm trying to say here, right? Now on the roof side, combining the daily structure and the 4 hour structure, you could see compared to the floor, which is thicker than the roof, so we all know that this is easier to break compared to this one. Now if we go on the previous structure, see, it makes sense, right? Look at this. Look at that. Look at that. There you go. See? It really makes sense. Right? So, by doing this, you will have the heartbeat and you will be comfortable as well as confident to use whatever strategy you have, whatever indicator you're going to use. If you're fine with the volumes indicator, do it. If you're fine with the CCI, RSI, then this is the good place. This, you must know how to trade Forex before you're going to learn any kind of strategy, any time frame, and any indicator. I strongly advise you have to learn this first. You have to practice it by your own naked eye. And from there, you could develop your own based on your personality, and it will become a skill. Good luck!